there are a few things, and I would add to your list of positive things also $71 billion of inflows in the fourth quarter and 240 for the year. So this is a record. The inflows are extremely strong. So that builds up a lot of capital for momentum in 2026. I think what's happening, there is some concern on the real estate side. Real estate business has not been recovering as quickly as some people anticipated, and probably Blackstone anticipated themselves. So that's sort of a drag among one of the four businesses that they have. Also, a lot of people are asking questions about the digital infrastructure. This is one of the key investment themes that Blackstone is invested in. And there is obviously some concern about the AI spending and a lot of those other things that I think is adding to some of the concern.
Well, in a related story, Jersey Mike's just filed to go public a year after going private with Blackstone. So that'll be, I would think, a nice IRR.
That's what they want to see happen.
Exactly. So, Paul, I mean, that Jersey Mike deal, we all love the Jersey Mike subs, but does that kind of confirm what Mr. Gray was saying about, hey, we're in a better position now from a market's perspective to monetize our deals, which has been a problem for the industry?
It has been recovering in the second half of 2025. So we've seen quite a bit of pickup in realizations in general for the managers, and the rest that we'll report over the next 2 weeks, we should see an improved results as well. If you think of the environment, the M&A has picked up, and there is an expectation of more escape velocity kind of going into 2026. And the expectations for the IPOs, the market where they can exit, are also improving. So Nasdaq also reported this morning that Dina Friedman was on the tape and talking about improving IPO pipelines.
All right, so that's definitely something that investors want to be hearing more of.
You remember, Scarlett, we had the big take story yesterday from Janet Lauren about how universities,
the
Yale model universities are liquidating some of their private equity investments, their alternative investments. Mm-hmm. Paul, has any of the big alternative investment managers you cover, have they mentioned that fundraising may be a little difficult here because maybe universities aren't as aggressive as maybe they were in the past in terms of investing?
Not necessarily, Paul. I mean, there are some players that obviously decided to pull back a little bit given the growth in the sector. But overall, if you think of the diversification of different strategies, money coming from insurance, from the wealth sectors, they're really diversified now. They're not tied to those kind of legacy institutions, endowments, and so on that they used to raise money, most of it. And a lot of that is perpetual capital. If you look at Blackstone, $1.5 trillion of assets, almost half of it is perpetual capital.
What's perpetual capital?
This is the capital that they don't have to give back, that sits in those funds like hedge funds, perpetual unless clients decide to pull it.
Unlike universities, which are saying, wait, I need some of that money now to pay my endowment taxes or to, fund the new gymnasium or the new dorm, what have you. So, yeah, that is something. And also, of course, private equity funds are now looking at retail investors and perhaps, putting them into retirement accounts. That democratizing access to private assets is a whole big thing. I want to also get your take, Paul, on Blackstone in talks to become the single biggest shareholder of New World Development. This is a Hong Kong development company. It's run along with many other property development companies in Hong Kong by a very wealthy family. What can you tell us about this, and why would this be a good addition to the Blackstone portfolio?
So in terms of the real estate, they've been very explicit that they do see the opportunities and they want to be opportunistic in terms of investing money in real estate, even though it's been kind of dragging its feet coming back. Hong Kong property market, if I recall correctly, that's been on the upswing. So they probably see a meaningful growth opportunity that they can do, and particularly in Asia. And Hong Kong hasn't necessarily been one of the Asia hubs for Blackstone. It's India and Japan, for example. But they are seeing an expansion in Asia in generally because in terms of privates, Asia is an underinvested market in terms of the private investments.